Okay, so here's where I think we go today on NASDAQ. The first thing I looked at was the monthly, just because I haven't been at the charts in a couple days here because I was working and I also was avoiding trading during that mini crash we had there. That was pretty crazy. But on the monthly, I'm still bullish, so that's something to be aware of. Okay, or respecting. Oh, I don't know if you can really call that an order block, but I'm still bullish. We haven't disrespected order flow. We haven't broken structure on the monthly. Weekly, I am bearish. So the weekly, I'm bearish, and the daily, I'm bearish, and I really don't like how we left this low here that acted as support. I don't like that. So I'm bearish on the weekly, and I'm bearish on the daily. Now the daily has a trading range. This is its trading range from here to here, and I already marked it. This is the equilibrium. I'm looking for price to take the previous daily high and trade into this fair value gap. Considering we haven't traded into it yet, arguably we did. We traded into this liquidity void. I'd like to see us trade into the fair value gap now. And what that would do for us, because this is the trading range, it would take internal range liquidity to then come for external range liquidity, which would be here. Now, I'm not targeting this, but that would be a long-term thing to look for. I'm not targeting that because I'm intraday trading. I would target, we'll figure out what I'd target, but it would be more near-term than that. So again, looking for this high to get taken. It would be a nice sweep on liquidity. You see how we left? Right, we're in a nice consolidation here on the 4 hour. Right, 1 hour shows it even better, right? Equal lows. Just a nice sweep, and then we can go lower from here is what I'm thinking. So we'll wait on that. I'm looking for a sweep and then go lower off of the daily fair value gap. And yeah, so target like this probably, which would still be a lot of points. So we'll see. That's what I'm looking for. Alright, if this would just... I need to wait on a breaker structure, so, I mean, it would be a decent entry here, but you don't get the breaker structure if we really did create an inversion fair value gap there. That would be the trade. Wouldn't love to see equal highs get lefts here if I'm gonna enter, but you know. Absolutely. I mean, thanks for stopping by, man. I appreciate the support here. Um, just waiting on some downside potential, and then we can potentially enter a trade, but we will see. So if this candle closes like it's going to, we now have the break of structure we want. We just need the distribution to the downside. We need to see it really want to go. And you see the way it's about to close right now would not be showing us that. View on ES. Let me check for you real quick. Usually, it's the same idea as NASDAQ, right? They kind of move together, obviously. So I would be bearish on the weekly. Just checking the monthly. The monthly doesn't matter as much for intraday, obviously. Bearish on weekly, bearish on daily. This is the trading range because we swept liquidity there to the upside, and we swept liquidity to the downside. So yeah, again, like NASDAQ, we're trading up into this bearish fair value gap, which would be internal range liquidity. And how price moves is it sweeps internal range liquidity and then comes for external range liquidity. And like I was saying previously, I'm not looking to target, the bottom here of the external range liquidity because I'm not swing trading. The chances of us hitting this in a single day are very, very low. So I would target something, a bit more short term. But yeah, no, this to me on the, let me check the 1 hour. I could see sells, I could. It kind of has the same setup as NASDAQ. I just prefer NASDAQ. That's just the one I choose to trade. But they tend to move together, so I could definitely see, a lot of equal lows as we started to chop up here. Filling this liquidity void, coming back into equilibrium of the range, right? Going to reprice into premium soon, so I could definitely see sells, definitely on a longer term. Now, do I see sells intraday? I mean, it depends on what you're targeting, right? But yeah, I could see sells. Right now, though, we're just chopping around after sweeping that high that I wanted to see. So, just waiting. Seeing if we can get some actual conviction towards the downside here. And if not, then most likely we will not be entering a trade today, which is perfectly fine. I don't care. I let the market decide. All right, I'm not going to force anything, so. I have been trading ICT concepts. Specifically, I use the 2022 model. I've been trading it since, or about a year now. I started learning ICT, but I have been learning how to trade now for 4 years. Just recently turned profitable. Been profitable for the past 3 months. it's really just all about the mental side of the game. It really is. Like, you can use any model. You can use support and resistance. You can use 2022 model, right? ICT concepts. Those two things are literally polar opposites of each other, right? Support and resistance and ICT concepts. But if it really just depends on who is using the concepts. If you can sit here and wait for whatever your model is and be patient and wait for that like A plus setup, you can be profitable using any model. It's all about discipline and patience. Like, I will take maximum 3 trades a week. Typically I'm taking 2 trades a week. So I'm sitting here, and the majority of the days throughout the week, I'm not taking a trade, right? 3 out of the 5 days, I'm most likely not taking a trade. And you just have to realize that that's part of trading. Like, you're not going to, I mean, unless you're a high frequency trader, you're scalping. If you're an intraday trader, you're most likely, you shouldn't be trading every day, right? So it's the reality of it. But yeah, I do daily lives. I tend not to be, well, I'll be active with chat, but I tend not to. I'll go over my outlook in the beginning of the live, and then I'll kind of just wait and see price kind of pan out, typically. But yeah, the lives can vary in length too, depending on if I get in a trade, if I don't. But yeah. You're confused with SMT though? I mean, SMT with ES and NASDAQ are essentially like, and I don't use it because I think it's just an extra, in my opinion, it's just an extra way to confuse yourself, and it's not really necessary, right? Like, ICT gives a bunch of different tools that you can use. You don't have to implement all of them. If you do, you're doing it wrong because you're just going to confuse yourself. However, if you do want to implement it, it's essentially, like, for instance, let's say that ES takes this high here, okay, on the 1 minute, and starts to sell off, and you see NASDAQ just starting to sell off here without taking this high. Well, you can use ES and say, okay, well, ES took the high, so we're good then. I don't really need to wait for this sweep. NASDAQ's selling off with ES without sweeping this high, okay, fine. I'm going to get in NASDAQ because I prefer to trade NASDAQ. And we don't have to take this high now because it was taken on ES. That's essentially SMT. Yeah. I am from the United States, East Coast. Which is rather helpful for trading New York indices, right? This section is too good for buyers. It's smooth. I actually tend to like how we left, equal lows here. So I agree with you. I think it is kind of setting them up for failure if they do buy right now. We'll see. I mean, we swept this high now on the 1 minute. I would like to see us distribute lower. I don't see any reason for us to go higher other than just if it really wanted to just fill this fair value gap more. I mean, it doesn't have to. Equilibrium of the fair value gap, if you're counting the liquidity void there, which I would be right around there. How do you normally place? Well, first off, like, what's your model, and how do you normally place your stop loss? Like, for instance, with the 2022 model, you can place your stop loss above a fair value gap high that you're entering off of, and that's like the aggressive version of how you would set your stop. I tend to always set my stop loss above a high. Like, for instance, if this was going to continue down here and maybe give us a fair value gap, right, and I entered off that fair value gap, right, above the high, and whatever my target is. I really don't care that much about risk reward, like, genuinely. If you get caught up in risk reward, it's an issue. Like, as long as my risk reward is above a 1-to-1, I'm going to take the trade. If the market gives me my setup, I'm not going to sit here and wait and say, oh, well, I know price is going to do this and it hit my entry, but it's not a 1-to-3, so I'm not going to take it. No. Like, I don't get caught up in that. A lot of and I used to, and a lot of traders do. They get caught up in the fact that they want to stick to one risk reward, like whether it be a 1-to-2 or a 1-to-3. I don't do that. Like, if it wants to be a 1-to-4 today, and my target makes sense and my stop loss makes sense, cool. Hopefully, I always hope for a 1-to-4 rather than a 1-to-1, but it doesn't matter to me, right? Win rate, in my opinion, matters more to me. Yeah, you use 2022 model. Yeah, that would be my biggest thing. If you are putting your stop loss above a fair value gap high instead of above just the high in general, that would be my biggest critique of just changing that up. Like, be as conservative as possible with your stop loss, and just, don't get too caught up in the fact that, the risk to reward is not big enough. Just give your trade breathing room would be my suggestion. All right, we're starting to sell off here. Now, I have a funded account. You're going to see me, right, paper trading. I just use this to kind of get a gauge of what I should be, how many contracts I should be using, because on Top Step X, they don't give you a friggin', like, another way to calculate it, so I have to do it this way. It's a little annoying, but it's the best way to do it. Probably target this low depending on, let's see. Or actually, I wanted this fair value gap. Yeah. There's a fair value gap on the 1 hour that I want to target. I gotta see how this closes. Risk 1% of my account, 3 units as of right now. Oh, is it not going to give us the fair value gap? Come on. Give it to us. Still 3, all right. Okay, no fair value gap to enter off of. That's fine. Fair play, fair play. But that was a nice breaker structure. I wish it would have given us that. Yeah, no. Um, it looked like it was about to give us some displacement there, right? It looked like it was about to break through, but um, yeah, just rebounded straight away. No fair value gap. So we will continue to wait. Um, this is my target that I'm comfortable with today. So if we end up, if the risk to reward ends up being too low, which would be below a 1-to-1 for me, then typically doesn't happen, but because a 1-to-1 is pretty reasonable. Typically, I'll get that at a bare minimum, but the big green bar is just it's an indicator. It's called PO3. And all it does is it's essentially just showing me the daily candle on whatever time frame I'm on. So I'm on the 1 minute here. It's going to show me what the daily candle looks like. But yeah. You see a trend line liquidity in 1 minute. Trend line liquidity, like, are you talking about like this here? Got to be careful too. Like, price has been extremely choppy after open here, after 9:30. So just something to be aware of. I typically will. I just risk 1% of my account for every trade. I won't up the size. I won't lower the size. It's just 1%, and that bodes well for me because I'm very. One of my skills as a trader is I'm very patient. So I'll wait. Like, today, does it look like an A+ setup? It could if it displaces, but if not, there's nothing. Yes, that was the trend line you were talking about. Yeah, I mean, for sure. I was really hoping that we would continue to drop lower off this candle here. If that would have, actually, I could delete this. If that would have formed a fair value gap, right? Then I would have been all for that sell. I was about to enter, but it did not. So here we are. So I mean, I don't typically trade off of an order block. It would have to be something very, very obvious to me as far as order blocks go, for me to want to enter off of an order block. Like, I typically will only enter off of fair value gaps. I might use an order block to target. Like, I might target an order block for my take profit, but I typically don't enter off of them. In my opinion, I just believe they're less reliable. They're also a lot harder to spot. Like, a beginner trader, they're going to think every up candle before a down candle is an order block, or every down candle before an up candle. Okay, it's not necessarily true. Like, the order block that the candlestick that could be an order block, it has to be within. If we're bullish, it has to be within the discount of the range, and if we're bearish, it has to be within the premium of the range. So that's number one. But I don't typically trade off order blocks, no. You're a little new with the 2022 model. So what I've found is, like I said, 2 solid trades a week is what I normally find. So, 2 times 4, right? You get eight trades a week, which, depending on your account size, if you're funded or if you have your own capital, like, that is all you need. All you need. You don't need any more than 8 trades a week to bring home good money. 8 trades a month. Excuse me. A really good program to use if you are willing to spend the money on it would be FX Replay. I have back tested so many hours in that thing, and it is just so good. It's so much better than just normal back testing on TradingView. It recaps everything for you, like, again, how many trades you took throughout the month, how many, what your win rate was, what your average risk to reward was. It's so good. I couldn't recommend that product anymore. It just is a little bit more on the expensive side, but it is worth it in my opinion. Called FX Replay. I gotta be honest, I really don't like how we're chopping around here. Let's see, did ES? Okay, ES is looking a bit different here, a little bit different. So there's your SMT to a degree, right? And we swept, and we kept. Right. Now I need to see this break structure, so it needs to close below here for me, which it did actually, close below the candle. So I'm willing. Only thing I don't like is it's kind of choppy. Like, we're still in this accumulation, but. Let's see. Okay. Let's see. Okay, if it taps me here, okay, I'm in. I'm in the trade. Only thing that could really go awry at this point would be the fact that we kind of are in a choppy market. So that would be the only thing that didn't really make this an A+ setup, but I have the inverse fair value gap. I have this normal fair value gap here. We broke structure to the downside. We had the SMT on ES, which I don't normally trade off of, but we had it. So we'll see how it plays out. But if you're wondering where I got in on my Top Step account, which is on Google Chrome, so it's not here, but I will show receipts like I always do. Yeah, TradingView is a good free option for sure. I mean, I backtested on TradingView for a long time before I found out about FX Replay. I think FX Replay is a fairly new software. But yeah, TradingView is a very good option for free. And a lot can be learned from backtesting just through TradingView. The only thing that FX Replay does that TradingView won't is it gives you like a dashboard to kind of show you your stats on how you did and how your strategy performs. So you would just have to keep track of that yourself, which is fine. It's just extra work, but it can definitely be done. So I usually give it about 5 candlesticks from my entry point on the same entry time frame to kind of make a move. And if it consolidates around my entry for 5 candlesticks, I typically will just take the tiny loss or the tiny profit. Because normally if price doesn't move fast in your direction, it will come and stop you out. So that is what I've come to learn. So we will see what price chooses to do here next few minutes. Just a choppy market. Yeah. Yeah, need a good push. We'll see. I mean, the only thing about this trade, I said it prior to my entry, was just I don't like how we were chopping around, like still within this range. So that would be the only regret. But again, like as far as a solid day of trading, all it's about is just did you follow your trading plan, and so far I have. So a loss, if it's a loss, it's a loss. If it's a win, it's a win. I followed my trading plan, so it is a good day. Although I will potentially close out this trade soon, because I just don't like how we're sitting in this range. I really don't. With these equal highs here too. Okay, I closed out of the trade there. I did. If it wants to run the rest of the way, that's fine. I'll tell you my reasoning for closing the trade. My reasoning behind closing the trade is I just don't feel comfortable in it. I really don't. We kept these equal highs here, which I really don't like. We're still in this range. If we break below this low, then you know we're probably going to cook lower, all right? But I just didn't like that. I really didn't. My original reason for the entry was I wanted to see a quick reaction off this fair value gap, which we just didn't get. So I closed it once we came back to my entry point, and that's that. But we'll see. It might go exactly where we want it to, but the way it delivered was not the way I wanted it to at all. So was looking at ES too, and I was thinking, well, ES didn't leave these highs, so that would be maybe a reason to stay in. But like I said, I don't trade based off of SMT at all. I'm just reading what I see on Nasdaq, and dude, these equal highs here, when I'm trying to sell, it just doesn't sit right with me, man. It doesn't. So, and again, like I said, right, I'll if price doesn't run quickly from my entry, I'm going to assume that I'm getting stopped out. I'll give it breathing room like I did, right? I put it above the high here. But I'm only going to give it so much time. Because what I've noticed through backtesting is those trades that you give too much time to play out, and you kind of end up losing sight of your entry. Like, let's say you get in for an intraday trade and it's been consolidating at your entry point for like 30 minutes, and you entered on the 1 minute. You entered off like a 1 minute fair value gap, and it's been consolidating for half an hour. So there's 30 1 minute candlesticks just consolidating around your entry point. Your entry point is no longer valid. I hate to break it to you. As much as you might want to see it run in your direction still, the likelihood of it doing so is very slim. So for me here, the continued consolidation within this higher time frame accumulation, 5 minute, right? Not higher time frame, but higher time frame than my entry, right? I just didn't like it, right? So yeah, it's and it's sweet on Nasdaq too. It's just a shame that the lower time frame here had to kind of play out the way it did. But obviously, if you look at Nasdaq on a higher time frame, as of right now, it looks pretty nice, right? We're getting that move we wanted to see so far. So, but ES for sure looks nicer. Like if you look at the 15-minute candlesticks on ES, right, compared to NQ, right? Look at these two doji candlesticks here, right? Signs of heavy consolidation, right, on the lower time frame. So here we didn't have as much as that consolidation, which is nice to see. Let's see, would there have been an entry? Yeah, for sure, right? Because this is a breaker structure here. After we close below this low, we have this fair value gap. We also have an inversion fair value gap there, but I would target whatever's closer, right, above the high. And what would be a good target for, underneath these lows into the hourly fair value gap would be a decent target. Obviously, we would take some partials on the way, and it gives actually a better risk reward than Nasdaq did. I only trade Nasdaq, so that's that. But if you trade ES, this is a decent trade today, for sure. It did a bit of its own little consolidation around my entry, but I would have been more okay with what I see here than what I see on Nasdaq, right? Not as obvious of a liquidity pool above, right? Nasdaq has a pretty obvious liquidity pool above that it left, which, Yeah, definitely smooth sell side liquidity for sure. And right above the target, which would be that hourly fair value gap. I see. The problem is I wouldn't even have considered a re-entry. My re-entry. I don't even think it wouldn't have been good enough because I got to target the nearest fair value gap, so it wouldn't have been a good enough risk reward. Actually, it would have been very close to a 1-to-1, but I wouldn't even have considered it because again, I don't like these highs. I really don't. But you have to consider that that's only 1 minute highs, right? And price is going to push, dependent on a higher time frame bias. So, but price just didn't move quick enough for me. Here is proof of the trade because I don't want to leak account numbers, so I just took a screenshot of hang on. Proof of the trade there. Again, like I said, I got out for just a very small profit rate when price went back to my break-even point. So, yeah. Give OBS a second here to load back up TradingView. It takes a while. Not exactly sure why it struggles with TradingView, but it does. Yeah, 4 mini. Again, it's a 50K account, so I will risk 1% of my account per trade, and that was the equivalent of 4 contracts. Yeah, I mean, ICT is definitely not a scammer. Like, his concepts work. But the reason why, the trading industry is... Look, the trading industry as a whole is known for scammers, dude. I mean, like, it would be very easy for me to rent a Lamborghini, post it on Instagram, say that I made it through trading, show a few screen grabs of, some fake MetaTrader 4 profits, fake that I pass an FTMO challenge or whatnot, and then make money through a course. And then, the cycle continues. You make money through the course, you buy things, you tell people you bought things with the money you made through trading and not the course, and you continue to get more people hooked, right? So that's why you just got to be careful who you learn from. I've definitely learned from a few scammers. I've been at this for 4 years, so I was lucky enough to stumble upon ICT eventually. But when people can't make his concepts work, they think he's scamming them. He's not. I mean, his concepts do work. It just depends on who's trading them. If you can't figure out the mental aspect of trading, like right now, like, sorry guys, I don't know why trading views not popping back up here. There we go. If you can't figure out the mental aspect of trading, then no concept is going to work for you, right? So you need to figure out the mental side. Like a lot of people, they'd be upset. Oh no, I took the trade off. Why'd I do that? Why'd I take it off early? Like I did, right? It ran to my first partial. It's gonna run to my final take profit. I was right. I should have stayed in. I'm being robotic. I'm following a set of rules, and those set of rules told me that I should not be in this trade after it continued to consolidate near my entry. So I got out. It's that simple, and those rules keep me profitable. If you can, as much as you can, take out the emotional side of trading, you'll see a big difference. I trade the 2022 model. ICT's 2022 model, so I essentially wait for a sweep on liquidity, break a structure, distribution back into a fair value gap. I'll also utilize inversion fair value gaps as well to get an entry off of, and then I will look to target some other form of liquidity. But the strategy, like I was saying earlier, isn't all that important. If you have a set of rules, you could trade support and resistance, right? If you're disciplined enough and you wait for whatever it is you wait for. I'm not too familiar with the silver bullet. I mean, all of ICT's strategies revolve around some sort of sweep on liquidity, right? Some use different entry points, like some will use an order block. I know the silver bullet is extremely specific to like a certain time of day, which time is extremely important as well. I'm not going to trade past 11:30 today is kind of my cutoff. If I saw something really nice at like 11:45, I might consider it. So my absolute cutoff is noon, right? And then I won't be back at the charts until 1:30. It's important, right? Timing is important in the market. So yeah, I think silver bullet is like the 2022 model. It just gets a little bit more specific with the timing of it. Like he talks about specific, like 10:10 a.m. is like price is going to move then, and 10:50, like he talks about how like 10 minutes before and after like what's the word to describe it, like 10 minutes before 10 a.m. and 10 minutes after 10 a.m. that's like a macro, he calls it, and 10 minutes before 11 a.m. and 10 minutes after 11 a.m. is a macro. Price is going to move heavy during those times. Yeah, entry within that time period. Yeah, those are essentially my hours there. They're just a little bit different. I'm willing to enter a trade before between 9:30 and 10, and I'm willing to enter a trade as soon as 1:30 p.m. in the PM session. So they just differ a little bit, but yeah, so it's literally the same thing as the 2022 model. I mean, it really, it is. I mean, you literally just described the 2022 model to me, so I'm not really sure what differentiates them. And that's the thing about ICT too. And I love the dude. Like, he's helped me, a lot. He's helped me an immense amount. But he is a marketer. He's a marketer, and he comes up with a ton of different concepts, and they do work, but sometimes they get rebranded by him himself. Like, he'll rebrand them. Like, there might be a slight difference between Silver Bullet and the 2022 model, but they're relatively the same thing, and you don't necessarily need to get too into the nitty gritty of how of how differentiated they are. Just find a model that works for you and stick to it. Do not switch models. Once you find one that you think works for you, you've back tested long enough, do not leave that model. You're going to go on losing streaks. It's part of the game. Do not leave the model. It's that simple. Yeah, dude, I'm always going to be looking for bias. Bias is extremely important to me. Like, I'm not just it's almost like I know he said that. But I know he said that more recently, actually. Like, I was watching some videos from, like, I think it was May. He was doing like a 4-day live stream, and I was watching, and he had a day about, like, you didn't need to know bias for this specific model. I just think I need a bias. I need to see where price should be going. I want to know, is this daily candlestick going to be bullish or bearish? Like, I need a gauge on that, in my opinion, and I think it's kind of almost like lazy to just come to the charts and not try to find that bias. Just to come to the charts and say, oh, okay, my model's here, let me take it. And then you wonder why, you get stopped out, because you're taking a buy setup and we're actually bearish on the daily. So yeah. Yeah, narrative is extremely important, man. Extremely. I watched I didn't watch it. I watched the first 5 minutes of the 2024, the most recent live stream he had, with the new mentorship, just because I was intrigued. But then he literally said, he's like, if you already have your model and you're profitable, leave. So I left. I don't want to get, like, clogged up with extra information that I don't need. That this new model I assume it's a new model he is teaching. I'm sure it'll help a lot of people. Like, people look at price action differently, so maybe this one will kind of make it easier for some people. But if you already have your model, don't get too clogged up with extra information. Yeah, it can be too complex, right? He uses a lot of terms, man. Like, there's so much out there. New week opening gap, fair value gap, order block. There's just so much. He calls them SIBIs, right? Sell side imbalance, buy side inefficiency. It's like, what the hell is all that, right? He can get a little complex, right? Which is maybe a downside of the way he teaches, but he certainly knows what he's talking about. That is for sure. So, but trading can be very simple. It can be very simple. It's just a matter of staying disciplined and being very patient and waiting for your setups and not getting emotional, right? I could be sitting here upset that I got out of the trade too early and it's running towards my take profit right now. I'm not. It's really indifferent to me. I don't care. I know I'll find more in the future, and setups that'll look cleaner than this in the future, that I'll actually stay in. Right, this one was too choppy for me. But Manus, you watched both videos so far of the new 2024 model? Was it informative so far? Like, was it anything new, or was it kind of like touching on some old concepts that, did he introduce any new concepts or? Also, I forgot to touch on, yes, old concepts, but this time a little change. 7 to 7:30 and 8 to 8:30. He's talking about, is that Forex related, or is he still working with NASDAQ? Because 7 to 7:30 on NASDAQ's crazy, right? That's interesting if it's with NASDAQ. Something else I noticed, though, is the fact that, or I didn't touch on, we are in August. We are in the month of August. I've back tested quite a lot. What I've found is August is the worst month by far for trading. Most choppy month, least amount of A+ setups is what I've found. ICT is actually mentioned just completely staying away from the charts in August. There's just, it's just a little bit more choppy than other months. I believe it is my worst performing month through back testing. There's still setups to be found, but more few and far in between. Looking for liquidity in that period. Interesting. I mean, okay. So he's not looking for a setup in that period. He's looking for liquidity to kind of build up. Is that? I might give it a watch. I don't know. I don't want to get bogged down by it. I don't. I kind of have my model here. I'm comfortable with it. I don't really want to switch anything up. But I do find his content, insightful. So I might give it a watch. So looking back, if I had stayed in this trade, it would have given me my first take profit, my first partial, and that's about it. Because at this stage, I'm taking my first partial, setting my stop loss to break even. It would have tapped us break even. So, what you might see the rest of the day, I am most likely going to get off the charts here soon. But what you might see the rest of the day is we kept this low intact technically. There's so much liquidity. We just built up more liquidity to the downside. You could see potential for, sweep here, come up one more time into that bearish fair value gap, and then go lower from there. The timing of it will be a bit weird because depending on how soon it sweeps here, right? The timing of it would be weird. Typically, you're not going to see a sweep and then a nice big move during lunch session, but it has happened before and will happen. It will happen in the future. So maybe that's what we see today, or we see a sweep and then a move during PM session lower. But we'll see. I mean, I'm still bearish, so. All right, well, I'm going to hop off the charts for the day. I might take a look at PM session later just to see if we are setting up for what I want and potentially take a trade there. I don't know if I'll be live for that. We will see. But I appreciate all you guys tuning in today. I appreciate everyone that was active in the chat. Kept me active with the live stream, right? It's tough to stay active with the live stream if there's no chats going on, so I appreciate that. Yeah, appreciate you, man. Thanks for being active. It was nice talking with you. So best of luck trading. All right, I'll see you tomorrow.